G'day everyone, welcome back to another update for natural gas. Now we've had a bit of a retrace in the last few days on the daily price at least. Not quite bearish yet. We'll go through the backtesting as well in a minute. Before we go any further, make sure you hit that like and subscribe button to support the channel, and also reference the +1 videos which we put out which cover various trading strategies. So if you want to get a deeper dive into the trading strategy we covered today and other videos, reference those +1 videos. In terms of the outlook, as of September 24th, natural gas prices remain stable, with Henry Hub averaging around $3 for 1 million British thermal units in the third quarter, expected to rise toward $4.60 in winter. US inventories are above average, but cold weather or LNG export disruptions could trigger price spikes. Global demand growth is slowing, with weaker consumption in China and India, while Europe is relying heavily on record LNG imports to offset lost Russian supply. Limited new LNG capacity until 2026 keeps competition tight between Asia and Europe. And for geopolitical risks, Russia's curtailed exports, fragile Ukraine transit, Middle East tensions and tighter regulations continue to pose upside risks, while exporters gain leverage but face scrutiny over reliability and emissions. So first off, for the natural gas price, you'll notice here on the weekly, it's still bearish below the moving averages of the price, even though the CCI1500 on the weekly is broken above. So that's somewhat bearish to neutral positioning on the weekly. The reason I'm showing you the weekly, daily and hourly are three different charts, because if you're new to the channel, if you're trading on the daily time frame, you want to go in trade in direction of the weekly. Or if you're trading on the intraday, the 1 hour or 15 minute or other time frame, trade in direction predominantly on the daily trend. So if you're trading on the daily, the weekly is somewhat neutral. I wouldn't be taking any trades, very cautiously at the very least. On the daily, you can see here we had a bearish momentum during this period. I marked it with some arrows, and we had a bullish divergence down here with slightly higher lows on the CCI versus lower lows on the price. That bounced, hit our 23-38% target range. And again, for those new to the channel, just to demonstrate how that works, we take the Fibonacci to that recent high, the significant high. That's a 23-38% minimum retrace we can see after a bullish divergence. Sometimes it just touches it and retraces back to the downside. In this case, it went right through and leveled off at the 61% level, which also happens to be this resistance at 33.15. So again, I like to take it back to the recent significant high in this case. That's a high there, but that's really not significant. That one is probably more significant because it broke above those moving averages. So at the moment on the daily, it's broken below. In fact, it's in the moving average range, and the CCI is below, but coming back to that moving average range. Now, one thing I want you to notice as well is the CCI here is contracting. What I like to see is the moving averages expand like they did back here. That would have been a safer place to go long if you're going long, as an example. Back here, you'll notice the CCI was again contracted on the moving averages versus the price dropping, and that was showing a potential reversal, which eventually did. So again, I'd like to see both the price and the CCI moving averages expand to give you a better momentum, if you like, in this case on the downside. So at the moment, again, neutral positioning on the price and probably neutral as well on the CCI as well. So if you're trading on the intraday, the 1 hour, probably very, very carefully, or don't trade it at all, if you want to be really conservative. On the hourly, again, we had a bearish divergence back here. The last one broke down between our 23-38% range, just below it, and it bounced out of there. There was, and notice the CCI then started moving in line with the price. Now, if you zoom in a bit, you'll notice here we had you look very closely sometimes, and there's a bullish divergence here between those couple of hours in that range there versus lower lows on the price. And I don't trade these. So again, in other words, if you're going short during this period, you start seeing a bullish divergence like that. That's what I use potentially to get out of your trades, any short trades in this case. Back here, there was another one. Notice here there was a bearish move versus the price showing bullish diversion, and that eventually bounced and went way above the 100% retrace in that range there. So at the moment, a bit of a bounce, but notice the CCI is coming back to that moving average range. We may see further declines in the price. Now, looking at the back test, go to the 1 hour time period. Again, you would have been going short from that period down here, indicated by the arrow. And from here on, you would have been going long. Now, I've got the back test started back to whatever that is, May, on the 1 hour time period, to demonstrate going long only in this case. So again, I would advise against going long against the trend, even though it can work. In this case, it did work, but it doesn't always do that. You got more chance of successful trades when you go in a direction of the daily momentum. I've deliberately shown you there the effects on going short, going long on a downtrend as well. But just be aware, sometimes these don't close out and you might be caught with a bit of a drawdown. Notice there as well with the long positioning, you got another drawdown there. And again, I use the divergence. You notice here a bullish divergence, and that also corresponded with the break above the moving average here to go long at that point indicated by the arrow, and you would have taken those few long trades there. At the moment, where it is at the moment, you would have avoided staying in a long position there, because even though the daily is somewhat neutral, again, very cautionary approach, you'd be going against the trend if you're taking long trades with that downtrend on the hourly as well. So this is BOIL on the weekly. It's a bit hard to read there on the chart, but that's bearish momentum below the moving averages. Also, the CCI is broken below the moving average. So bearish momentum, taking short trades only on the daily if you're trading the daily. The weekly is bearish. On the daily, we did have a bullish divergence back here. Broke up, didn't quite hit our target range. And that's because I drew the target there. Sometimes you've got to be careful where you draw these targets. Let's draw that again. So again, that probably would have not been a significant high, but I took it back to that level, I believe. Yes, it was. That broke well above the moving averages, and that was this 23-38% target range. In this case, it didn't hit the target range, so the CCI started moving up. Now notice the CCI is still moving to the upside, even though the price is broken down, so that effectively could still be a bullish diversion, which means the price may retrace to the upside sometime in the coming days. So that has not yet finished. If that kept dropping lower, then that would have invalidated that bullish divergence, and that would have failed. So I'll keep that there for the moment to see how it goes in the coming days. So at the moment, somewhat neutral, because that's still a very narrow moving average range, neutral on the CCI, but bearish on the price. So I'd call it neutral overall. On the 1 hour time frame, again, a couple of moving averages, a couple of divergence there. That one was hit with that candle. This one failed, and this one probably just touched it. It's a bit hard to read there. That was in accordance with this bullish diversion. Now, where we are at the moment, the CCI is broken higher. The price is also breaking into that moving average range. So remember that if you're trading on the hourly, we're going short. So probably avoid taking long trades until we see the price on the daily as well break to the upside. Again, notice that very narrow moving average range. I want to see that expand. I want to see the price break above that, but also start expanding, with the moving averages widening and separating. Now, in terms of the back test going short here, you can see they're going short from that period around about the 20th of May. This period here, I could have started it going back here with the back test, and you can see there if I zoom out from that high, that would have been successful short trades as well during that period on the daily. But just for the exercise, I've started going short from there and had a couple of average downs throughout the period, and again paying attention to the bullish divergence on the 1 hour time frame, but especially the bullish divergence on the daily. Whenever you start seeing that, close out your short trades. So for KOLD on the weekly, bullish momentum on the price chart, with the CCI also continuing in an uptrend. So it's bullish momentum on the weekly, which means you can take long trades on the daily. On the daily as well, the moving averages have been broken on the CCI and the price, so bullish momentum. And on the hourly as well, currently it's broken below the moving averages on the CCI, on the hourly, and the price is retraced back to those moving averages. So don't go short. Go in the direction of the daily. So as soon as the daily starts bending to the downside with these moving averages on both the price and the CCI, then you can start taking short trades on the hourly. And again, going to let's see first, we'll see if there's any divergence. The last divergence we had was back here, a bullish divergence on the daily, and that coincided with this bullish move to the upside. On the hourly, there's no divergence that I can see there. Last one we had was back here with a bearish divergence versus the price. That pulled back, and you would have closed out any long trades if you're going long during that period. On the back test on the 1 hour, again going long from this period around about the 24th of June, indicated by the arrow here, you would have taken long trades, and again paying attention to any bearish divergence. There was one there, you would have closed out long trades once the price broke below and the moving averages started bending down. At that point there, that would have been an area to get out of. You didn't have any positions open anyway, according to the back test. But also notice as well, if you're going following the daily trend, at the very latest here, you notice here on the daily, it broke into the moving average range, so you should not have any positions open on the 1 hour. And that also corresponded with this bearish divergence as well. Just give you 2 indications to get out of any long trades. And lastly, for UNG on the weekly, price is below the moving average. So is the CCI, so taking short trades on the daily, if you're trading the daily. There's no divergence on the weekly. On the daily, that's probably short as well. You can see the moving average on the CCI is very narrow. If that continues, that's coming back towards that support line at 1242, the last day of trade. So we might see it possibly go higher, but at the moment, somewhat neutral positioning. I'd call that a neutral positioning on the CCI. So don't go long until we see both the, if you're going to go trade on the daily, make sure the weekly is also bullish, and at the moment it's far from that. So don't go taking long trades. You can do it, but again, you're going against the higher trend, which is what we suggest. So again, on the daily, probably bearish on the daily, which means you can take short trades on the hourly. There was a bullish divergence back here that broke up and broke through our, we didn't draw a target on it. Let's just draw a target for it, see if it did hit it. And you would have done a Fibonacci from that point and taking it back to, it hit that 23.38% very easily there, went almost as high as the 50. But even back to that level, you can see there it hit the 23.38% range. And again, notice that's a significant high. That was fairly significant, but it didn't quite break above the moving average. And that's probably a good indication to go, consider that a significant high. That one, not so much. So that was hit a couple of times there, and then currently it's retracing back to the downside below that support line, as I said. On the hourly, again, we had a bullish divergence back here. That one was hit, this one missed. This one here was hit with these candles. Went as high as the 38% range a couple of times, and it's broken back down again. And there's no divergence that I can see there. On the back test, so you would have gone short either there or there, and that one consolidated a bit. But here on the back test, on the going short period, you can see there the number of short trades taken, a few average downs happened. But overall, paying attention to the daily bullish divergence back there, you would have got out at the very latest when it broke above the CCI there, and that corresponded with also this period here on the hourly where you had a bullish divergence. As I said, it hit that range, and you should have got out at the very latest, and that gave you 2 indications to get out on the hourly as well as the daily. But also to pay attention to any, in this case, we had another bullish divergence there, get out of that short trade at that point. And there was no other, and there's another small bullish divergence there. So you should have got out. Even if you don't use the divergence as an indicator, you could also use the moving averages, and that's why if you zoom out like I have here, if you see the moving average, if you're going short, and if you see the moving averages moving upwards like they were here, for example, and you're going short in this period, even without that bullish divergence, you want to pay attention to that upward momentum on the hourly and get out of the trade, getting out of any short trades when both the CCI and the price are moving averages are turning to the upside. If you enjoy the content, subscribe at least on a free trial to my Patreon page where I publish weekly bullish shares across regions of the world's markets. Hit that like and subscribe button. Thanks, and talk to you in our next video.